Hey, and welcome to the channel. Today is May 4th, and today the Fed just raised the rate by 0.5%, so half a percentage point. Last month they raised it 0.25. Right now the rates for mortgage nationally average right about at 5, a little over, a little under, depending on where you are. In our area, there's still a ton more buyers than there are sellers. So there's still quite a demand for housing. I guess a month ago, the inflation numbers came out and we're sitting at 8% at the CPI, which means real inflation is quite a bit higher because the CPI doesn't include a lot of actual products and goods that people use. So a lot of people are talking about and are worried about a crash, which will probably happen, but I don't think it'll be a housing bubble crash like there was last time. The environment is quite different. Last time it was caused by banks giving out crazy loans to people who couldn't afford it. And since then, it's been not as easy to get a loan. And most people have to be well qualified to get one. So that mitigates a lot of the risk that happened last time. And this year alone, I guess January to now, May, hedge funds and investment companies have been buying up about 21% of every home that's for sale. So that's just over 1 out of 5 homes they have been buying. And hedge companies, investment firms, they don't buy to sell, they buy to hold on to. So even if when there is a market crash, there's a good likelihood that they won't be selling their homes, which takes 20% of those homes that might have been foreclosed on just off the table. So that alone should mitigate any housing bubble crash that might happen due to a larger market crash. Again, I don't think the Fed is willing to do what they need to do to raise rates to slow inflation down. They're still going to be printing. They're not going to stop printing. And as long as they're printing, I mean, it doesn't really matter what they do. It's not even a Band-Aid. It's like a Kleenex over a cut or something. It's not going to do anything. So I guess a month ago, they said they were going to raise rates every quarter, a 0.25% every quarter until the end of 2023. So they'd be at 2% by the end of 2023. But now they've upped their game. Basically, it sounds like they're ready to go 0.5% every month until they get there. But like I said before, that won't be enough either. So I guess that's the state of the market right now. If you're looking for a home, it's still really hard to get into somewhere at a decent price at all around here. You're going to be paying over asking price, and you're going to be most likely in a bidding war with investment firms and companies. And I really don't see the housing market prices going down. I mean, we'd have to see a complete collapse. I don't think a recession is going to slow it down. People still need places to live, and people and companies with money are going to buy up anything that drops in price as quickly as they can, which is going to keep the prices pretty much where they are. So I don't see much changing in the near term. We might level out as far as prices and demand goes, but I don't see anything around here falling. In your area, it might be a lot different. I know in some areas people are already, this last month, the numbers have shown that their sellers have been lowering their prices to get their homes sold. We're not yet seeing that here, but we'll see. That's what's going on at the moment. And if I missed anything, or if you have another idea of how this all will play out in the near future, let us know down in the comments. Hit that like button if you liked it, and I'll talk to you guys next week. Bye.